So there's been a bit of a growing trend lately for some of these giant tech companies that have grown so insanely large to the point where they're now buying the stock of other companies themselves, especially smaller ones with exciting technologies that they can benefit from through collaborations or even just to kind of help them grow larger too and benefit from a rising stock price as well. Now, I recently showed you that with Nvidia, but in today's video, we're going to look at another tech giant in Amazon. That's right, Amazon is actually investing in several stocks, spending many millions of dollars, even over $1 billion in one. It's pretty crazy stuff. And more specifically, today, we're going to run through the five largest of those investments that Amazon is making directly in other stocks. I'm going to give you my opinion on each one of them, and I'll even rank them from best to worst too, based on that opinion. And by the way, most of these are actually stocks that I don't think I've ever even covered before on the channel. So it's some very interesting picks here. It's going to be a lot of fun to look through them. Make sure that you hit that like button and subscribe if you haven't already. Thank you to everyone that does support the channel that way. Couldn't do this without you. But with all of that said, let's go ahead and just jump straight into this list. Now, we'll be sorting these from smallest to largest holding that Amazon has in their portfolio. And coming in at stock number one, the smallest of the bunch, well, we have Marvell Technology, ticker symbol MRVL, which they now hold about $14 million of and is worth just over 0.5% in the portfolio. Now, if you're not familiar with this company, they're actually a chip designer that's benefiting a lot, especially recently, from all the growth in artificial intelligence. And that's with especially their AI accelerators and networking chips that even some of the biggest tech giants use themselves, like Microsoft, Google, Meta, and of course, Amazon, who's also hired them to design their custom Trainium 2 AI accelerators that achieved a cost savings of 30 to 40% over NVIDIA's GPUs. So it's very impressive what they're doing there. And going forward, the trend looks like it'll probably continue as these four giants alone are spending hundreds of billions of dollars on AI infrastructure, which bodes very well for Marvell's addressable market that continues to grow by billions of dollars each year, and thus is also resulting in some pretty nice growth rates for their financials, with both sales and profits expected to soar in the coming years. Despite all of that growth, though, analysts and investors are worried about rising competition, which I think is a fair argument, considering how impressive the technology of other chip designers in the same space has become, notably from companies like Broadcom and AI Chip, but even NVIDIA in certain parts of the markets too. If even one of those companies though manages to steal a big future contract away from Marvell, especially with one of those big tech giants that I mentioned earlier, then it could actually be devastating to their financials. But because of this risk and a few other concerns, the stock has actually crashed by over 40% from their recent highs, leaving behind a pretty cheap valuation at a PEG ratio of not only less than 1, but it's also a whopping 67% lower than the sector median. I think that's pretty attractive. Now, if Marvell is able to fend off competition, which is definitely possible considering how strong and impressive their technologies are, then this could be one heck of a high-flying growth stock long term, since it's a very rare combination that we don't often see of both kind of like a growth and a value type of stock combined into one. So I really like the pickup here by Amazon. In fact, I would actually consider buying some myself if I didn't already own so many other chip stocks, including, by the way, some direct competitors like NVIDIA and Broadcom. But for giving them a ranking here, I'm going to go pretty high. I want to put them at number 2 for now, at least until I see what else is on this list. Now, coming in at stock number 2, well, at least until we see what's on. I've already seen the list, but until we go through it together. Coming in at stock number 2, though, we actually have another very interesting pickup here that I've never covered before on the channel, and that is Astera Labs, ticker symbol ALAB. I just call them ALAB, which Amazon currently holds over $16 million of at about 0.7% of the overall portfolio. Now, this one just went public last year, and it's been, I don't know how else to describe it other than just like a very wavy type of stock with a couple huge climbs, a couple big dips, but overall, it's actually still up about 34% all time. Now, Amazon's investment into the company does make some perfect sense, though, as ALab is another semiconductor company, but one that focuses more specifically on AI connectivity, helping data centers speed up their communications between chips, basically eliminating the bottlenecks that you have between the various CPUs, GPUs, memory, and other hardware within the data center itself. Something that is, extremely important for AI systems to run faster and more efficiently. The result has been, though, growing orders from not just cloud and AI giants like Amazon, but even Nvidia, Intel, AMD, and more, which is also helping them turn a profit for the first time this year. And going forward, both sales and EPS are expected to rise by around 30% a year, too. On the other hand, though, competition is also fierce for this company, with even Marvell being a direct competitor. They offer some similar solutions too. Who, by the way, I would also mention that Marvell carries a cheaper valuation, especially on current PEs, but even on a forward-looking PEG ratio too. That's not to say that A-Labs is too expensive here. It might be a fair value, but because Marvell looks a little bit better, just in my opinion, I'm going to keep them at number 2. I'm going to put A-Lab just right behind them at number 3 for now. Okay, moving on here. We have at stock number 3, we have Vital Farms, ticker symbol VITL, which Amazon now owns over $46 million of and is worth about 2% of their overall portfolio. Now, I know what you're wondering, why is Amazon investing in a farm company among these other, chips and AI stocks? And honestly, it kind of caught me off guard a little bit too. But the more that I looked into it, the more it kind of started to make a lot of sense to me. Now, this is a company that mostly just sells pasture-raised eggs and butter using a more ethical and transparent supply chain. And you might have purchased their eggs and butter yourself from your local Sprouts or Whole Foods too. I've actually had them a few times myself. And when it comes to Amazon investing in them, well, you have to remember that Amazon actually acquired Whole Foods back in 2017. So by now investing in Vital Farms too, becoming essentially part owner, well, Amazon is pretty much, I would say, kind of securing that reliable supply of high quality produce. And over time, they can even help them scale up using their gigantic expertise in logistics, right? Like nobody does it better in logistics than Amazon. So, I mean, by that logic, it makes almost as much sense as, investing in smaller chip companies to support their cloud server and AI businesses too. All of these are kind of strategic investments and partnerships going on here that can actually help Amazon as well. And by the way, some have even speculated that Vital themselves could actually be an acquisition target for Amazon down the road too, which wouldn't really surprise me with any of these companies. Really, I could actually see them wanting to get closer to them. As they're investing in them, they're forming stronger partnerships. You might start to see that they have a lot of future potential, and you might just want to flat out acquire them before they grow too much larger than they already are, right? Now, with all of that said, though, stock-wise, Vital has been pretty much flat since IPOing in 2020, despite what has actually been some pretty consistent growth, at least on the top line, with last year, for example, seeing not only a 28% surge in sales, but even a double up on their profits too, as they've now started to become profitable and they've started to run a lot leaner going forward. Now, that bottom line growth is not going to stay that high, but just the point is that now they're improving on that side. Now, I suppose the biggest concern moving forward, though, would just be kind of the lack of diversity away from, just really selling eggs and butter, which may be the reason why their revenue growth rates are also now falling year after year, with still a pretty rich valuation. Despite that is 70% more expensive than the sector, at least on adjusted forward PE basis. Now, that's a tough pill to swallow for really any company, but again, especially for one that just sells eggs and butter. That doesn't mean that it's a bad stock or a company. I actually think that they're doing a phenomenal job within the constraints that they have, but it's just not as exciting of a company as really any of the other ones that we've mentioned so far. And because of that, I'm just going to have to place them in last place for now. Even though I do like the company. All right, guys, that's 3 down, and we still have 2 more to go. That's going to be the 2 largest investments for Amazon here. So it's going to get a little more interesting. Coming in at stock number 4, though, we actually have their newest pickup. and that is in Advanced Micro Devices, what we refer to as their ticker symbol, AMD, which Amazon just recently purchased over $84 million of last quarter, bringing the stake up to about 3.5% of the portfolio, and it's already, their second largest holding. Now, for this one, I actually do really like it a lot. AMD, I've always felt is that kind of perfect I would say alternative option in the market really to Intel for CPUs and Nvidia for GPUs, selling what are still some very powerful and comparable chips, but at much lower prices. And that's really helped them steal market share along the way, which is exactly what we've been seeing. Last year, for example, NVIDIA's H100 AI GPUs were costing 4 times the amount of AMD's competing MI300X chips. Now, obviously, NVIDIA is always going to be the better option for people that want the best performance. But because of that dramatic difference in price, and when there's just so much demand across the board for AI, it's obviously going to lead to some growth for AMD. And again, that's exactly what we saw last year. It helped boost their data center revenues and profits by a whopping 94% and 175% respectively. And that's a huge deal because it's by far their largest segment. Now, the second largest segment is their client business, but that also soared by 52% and over 2,000% on the bottom line, respectively there. And although gaming and embedded saw declines, there's enough positive momentum here, especially with the rise in AI, that we really should still easily see some record high revenue and profits down the line coming in future years. It's exactly what analysts are projecting. And yet, because of a recent dip of almost 40%, coupled with their, again, high growth rates, well, their PEG ratio is actually 28% cheaper than the sector. That's very attractive. And look, personally, I used to own AMD stock, which I later sold for a huge profit myself. And I ended up using that money to invest in NVIDIA instead, bought a ton of that. But once again, I find myself tempted to jump back into AMD stock now that it's trading so low. I haven't done that yet. I'm heavily considering it, but regardless, it's going to get the highest ranking here of number 1 because I just think it's looking very attractive at the moment. Okay, finally, though, that's going to leave us with the fifth and the number 1 largest holding. We have Rivian, ticker symbol RIVN, which is the only stock that Amazon owns over $1 billion of at a whopping 81% of the overall portfolio. But for this one, surprisingly, I'm actually not a very big fan of it. Now, don't get me wrong, for Amazon themselves, I think it makes perfect sense as they continue to build out a massive fleet of electric vehicles that are directly supplied by Rivian. But as a standalone company, apart from having, the backing of Amazon, I just feel like there's not a whole lot going on here or to really get too excited about. Now, I think their trucks and SUVs are impressive, but at current prices, north of $80,000 on average, I just think that they are way out of reach for the mass consumer market. Now, a couple positive notes are that they are planning to release a cheaper EV next year, and they've also ended exclusivity with Amazon on their electric vans, which opens up the door for them to sell basically fleets to other big companies. But we still have to kind of wait and see how successful these moves will be in the future. Similarly, they've also worked on autonomous driving technology, but there too, I just don't think it'll ever be as strong or successful as what Google, Tesla, Nvidia, or even Baidu is already doing. And all 4 of those stocks I happen to already own myself. Plus, their financials are not even that impressive, with still giant losses despite many years of being in operation. Now, on the bright side, the stock has at least fallen by almost 90% because of all of this, but even then, their price-to-sales ratio is still 250% more expensive than the sector. Again, I understand why Amazon owns it, and even if smaller investors have it too, I think there's a decent chance that it climbs higher longer term because it's already taken such a giant beating ever since IPO, and especially with Amazon's help, and if they remain partners even after ending that exclusivity stuff. But apart from that, I just think there's better options out there, and I even see some better metrics and more future growth potential, I would say too, from the other stocks on this list. So I'm actually going to give them the last place ranking of number 5. But hey, that's just my opinion. I would love to hear what you guys think about all of these down below. Overall, I think there's some very interesting stocks here. A little too speculative for my taste overall, but at least, AMD, I'm a very big fan of. And like I said, all of the holdings I think make perfect sense from a partnership perspective for Amazon too. But hey, let me know if you own any of these stocks yourself, or if you agree or disagree with my rankings on them. I'd love to hear your thoughts on that too. But hey, either way, I hope you enjoyed the video. Thanks again for stopping by, my friends. I hope that you're all doing well out there, and I will catch you in the next one. All right, take care, everybody. Bye-bye.